each person has to figure out what they're comfortable with. Like I've been a trader for 20 years. So for me in this market, I'm what I call a swing trader, which means when the markets flush sharply, I buy key technical levels and then I don't stick around too long. I might hold it for a day, a couple days, a couple weeks, but I'm looking to sell into the pop, as in bear markets, we ultimately will go lower. So I think that's one type of investing, but it's not for everyone. Needless to say, if you work a 9 to 5, it's very hard to follow the markets very closely. So I think if you're that type of investor, you start looking for safe assets, right? You kind of move your money into maybe a little bit of gold, a little bit of silver, where in the very least it'll be protected. And I think even gold could give us a return in 2023. And I even think there will be a point where some assets, maybe a very small percentage, can go into Bitcoin when it finally bottoms out. I do anticipate a bottom in 2023, finally, in that asset. Again, how much it goes up from there, we'll have to see. But I think that, again, each person has to kind of think about from themselves. But I definitely wouldn't be like buying every dip right now in Apple or any of these others. Understand that bear markets get uglier, and we're just in probably the beginning stages of it. There's no doubt that in 2022, gold stocks, gold miners, they really took a big hit. And again, I'll explain this really simply. And you can see that, again, if we go back to the start of 2022, it's actually not as bad because gold miners have had a big bounce. But I mean, you're still negative for the year versus gold being slightly positive. But if you think about it, this makes a lot of sense, right? Because gold was not going up in value in 2022. It was basically flat or slightly negative. However, the miners' costs were all skyrocketing. Their labor, they had to pay more for their labor. They had to buy equipment that was more expensive. I mean, basically because of inflation, there was huge jumps in their costs of running their business. And so without gold going up in equal amounts, it makes sense that the miners would underperform. Now, we have seen a good bounce because what we're seeing right now is gold is starting to rally and inflation is coming down. So if that's the continued trend, let's say gold goes up 10 or 15 or 20% in 2023 and inflation continues to come down, then you'd actually expect the miners to have good pricing pressure or pricing power, and miners actually should outperform in 2023. So I think the key is that inflation number. Like, watch to see that inflation continues to come in, and then the miners should do really, really well. So silver, there's no doubt that 30-ish level is definitely one of the key levels. One of the charts I want to show you here, and let me show my screen again, is the chart on silver and the perfect channel that it's been in since that same run up from the COVID low right here in March of 2020. We had this big move up, and we basically went from $11 and change per ounce to a high of about $30. And then look at how you've just been stuck. Low end hitting here and here and here, and then your high end hitting multiple times here, here, and here. And so what this tells me is that silver has a little bit more short-term upside to about $25 and change, and then silver is going to actually run into resistance. Now, I actually personally think in 2023, you break out on silver, but just be aware that it's got to get through this 25, 30 level or so before that breakout can occur. Short term, we're a little bit extended just because it's been such an amazing run on silver. Silver's gone from, $17 and change to 20, almost 24. So it's due for some consolidation, but I think you actually look to buy that consolidation after a little while and look for that breakout in 2023. So again, I think that gold is the safer play, meaning that you might not get as big of a bang for your buck out of gold, but it's also not going to collapse as much. Silver, because it's an industrial metal as well, there's a little bit more volatility. So investors just need to understand the risks difference in each metal. I think, again, the more industrial the metal, the more you have to be careful. Like, for instance, copper, I would remain relatively hesitant on copper. It's good to see China reopening, getting away from their COVID-0 policy. But if we are going to continue to slide into a global recession, then copper may have trouble. Oil, I continue to think it's going to go lower. You'll have bounces, but a global recession means a ton of less barrels being bought on the open market. And even if OPEC wants to cut production or Russia has issues, it doesn't compensate for the lack of demand that can be generated or lack thereof in a recession. So for the most part, I definitely am, my favorites by far remain gold and silver. Those are kind of the clear-cut winners in my opinion. And then you have to just look at other metals that are precious metals. I mean, there's always something like rhodium, but it's super expensive, but obviously that's a precious metal as well. TX scenario, first of all, horrendous for investors that are losing or have lost their money. But I do also think it was the kick in the pants, if you will, that the regulators regulators in Washington needed to get something on the books. When you get that many people to get hurt, and also big money got hurt, which is kind of the first time I would say that institutional money really took it on the chin. And so I think that that's also going to push for regulation. And I think this is going to be the best. I know everyone was against it when crypto was rocking, but this is why you need regulation. You need rules. You need transparency. Otherwise, unfortunately, there's always bad apples that are going to do shady things and end up robbing people. So we get that regulation in the door. And then once you have transparency, big money can actually invest knowing it's somewhat safe, right? It's still the investment. It's still risky investment, but at least they're not going to get their money stolen. So I think that's the key there. It's really a crazy scenario, but I liken it to the Lehman Brothers collapse. The Lehman Brothers collapse in 2008, because again, very similar in Lehman wasn't doing shady, like illegal stuff, but they just over leveraged themselves quite a bit. And again, you have the same sort of kind of panic and sell in the crypto markets that you got back then. And so again, for me, I have it priced in that Bitcoin probably continues lower. Maybe as low as 9,000 is kind of my key target right now. But once it gets there, I think it's going to coincide with regulation coming out. And then I think you actually start to see a move back up in Bitcoin. Like things that I would want to see would be like FDIC insurance, where, one of my big concerns in my accounts is if someone hacks in and they steal my funds, it's gone technically. And I don't have any recourse about it. Once it's gone, it's gone. And I think the government needs to protect investors in that way. I also think you have to have, regular audits, like a lot of the same things that publicly traded companies have to go through. They have to show the books. They have to have it audited by a legitimate firm. There can be no hiding of assets or anything like that. What are they using? It all has to be revealed. Like if your customer funds are here, how much do they have to keep in reserves to protect the money that's on their books and stuff like, so all of these things would be really positive. I think we do run the risk of seeing the politicians over-regulate a little bit, but I think at the same time, that's a risk that you have to take in the crypto sector. Otherwise, the cryptos, like if you don't get investment, if you don't get regulation, crypto to me is almost like a dead asset, unfortunately. And so it's a big deal. You have to have it because otherwise big money's not coming in, and then you're not getting Bitcoin to 100,000. You're not getting it to 1 million and so forth. If you get transparency, I really do believe it can go there. You're exactly right. For me, it is a 2023 bottom. I've priced it out right now where it would be about May or June. And I'm doing that based off of the FTX debacle, matching it with Lehman Brothers. Lehman Brothers, the S&P fell for another 6 months and dropped about 45% from that event. And so if we have that same sort of shock to the system in crypto with FTX, and from that date, 6 months out puts us in May or June of 2023, and 45%-ish from approximately when it happened puts us just below 10,000, around that 9,000 marker. Now, there is always the possibility it could go even lower. The worst case would be like 3,500 on Bitcoin, and then it would match up with Amazon's collapse in the .com. Amazon dropped 95% in the .com collapse, and that would put it on par. But that would be like a worst case scenario where regulation doesn't come out. And for the most part, I think you will get regulation. And so it will draw in some bigger money at that point at 9,000. 2023 for me, I'm going to pick gold again. And I don't like repeating myself, but if it's going to be the best performer, it's the best performer. I think that in 2023, gold will outperform. My guess is in 2024, Bitcoin will be the best performer. I think the stock market likely is going to be mired in a multi-year recession. So stocks will likely struggle for the next 2 or 3 years. I actually don't even see new all-time highs in the S&P and the NASDAQ, probably for 10 to 15 years, which is kind of scary. But remember, you're coming out of this massive liquidity craze. And if you go to the .com collapse, it took the NASDAQ 15 years to make new all-time highs. So it's going to be a swing trader stock market, investors gold market, and then probably eventually a bottom picking Bitcoin market.